Good day to one and all. This is Dr. Sivaraman of iknowindices.com. We are into the new month of April, and it's the first week of April. So the expected market moves for 3rd to 7th of April, I'm going to give during this Asian Sessional Live Market Analysis and the Forecast webinar. So basically, we need to understand that the first week and the last week of the month, the players are known to make the quick volatile moves or monthly trend reversal moves. So in that particular condition, we have to be very cautious while doing trades. Any quick drop, we can take a buy. Any quick rise, we can just exit out of the position because they are expected to reverse the market from time to time in order to handle the derivative market. So we need to understand that the players need to make volatile moves in order to induce the traders to commit wrong positions, not only in the spot market, what you find in your trading platform, but also in the derivative market, the futures and the options, forward cover, etc. They want the traders to commit wrongly and wait. So normally what happens, many of the traders, when they have open position, they will try to limit the risk by taking the hedging positions in some other market. When the hedging facility is not available in the same currency, then they go in for the same currency in different market. One such market is the derivative market. And for that of the exporters and the importers and the institutions, there is another market, namely the forward cover. So they can take the futures market and then try to take the positions whenever they are going to receive the currency and fix the rate so that when the market goes to that particular time frame, they don't incur any loss. So there are various options available for the traders. And what happens, the players handle such markets and they induce the traders or any other currency conversion trade people to go in for a wrong decisions. So only when they take the wrong decisions, they will commit the position later on, repent and lose the money. That becomes the profit for that of the players. So every time you come across during that of the month end and the month beginning time, the players show extreme moves in the market. They show the extreme lows. Last week we have seen the extreme lows they are shown in the case of Euro and GBP, and also extreme highs to a certain extent. And this time again, during the first week of April, they will try to show the extreme moves on the downside as well as the upside in order to fix the lows and the highs in the derivative market. So we have to look into the other forecast, then fine-tune the forecast using the market trading and use the trading strategy to limit the risk and maximize the profit. So this is the way we just plan our trades. First of all, the forecast. So it is the first week of April. So monthly trend reversal moves are expected. So one has to be cautious, and it is better to do the swing trades exclusively within the session so that we will have definite profit. Even though the profit might be less, but still you'll have a definite profit if you follow the forecast, session-wise forecast. Besides, you also find that they firm up and rise and then drop and things like that. So this sort of moves will be somewhat very confusing for that of the traders, and the traders think that the market is crazy, etc. But the players do it purposely in order to induce the traders to commit wrong positions and later on repent and cut loss. So this is the story you find every time. So we need to follow the forecast and fine tune the forecast using the market trading technique. So today, 3rd of April, they are expected to make the swing and slide during that of the Japanese session. They are holding with the positive net change in the case of euro, but negative net change in the case of GBP as well as Australian dollar. Slowly, they will make the slide. Then afterwards, they are expected to make the swing and firm up during that of the European session, and then swing and rise during that of the US session. Tomorrow, they are expected to make a quick dip and then rise during Japanese session, and then higher level swing and slide during that of the European session, and then swing at the lower level and rise during that of the US session. Then on Wednesday midweek, all along they are expected to gain the levels quickly in the market in order to give that impression to that of the traders. The market is going to visibly make upward move. But later on, you will find on Thursday, they will make the swing and slide during that of the Japanese as well as the US session. And European session, they may hold or rise nominally. Then on Friday, they are expected to make the swing and rise during that of the Japanese and the European session and slide during that of the US session. So you'll really get confused why the market is behaving like this. And after that of the week beginning false move during start of the next week, they are expected to make an upward rising move, and that will be unassuming gaining moves in the market. And that will be the trending move on the upside during that of the 2nd, 3rd, and the 4th week of April. So this is what the forecast says. Now let us see in the range in which the currencies are expected to swing. Euro could swing from that of 1.06 to 1.10 level. Then in the case of GBP, it could come down to 1.24 and go up to 1.2850. Then in the case of yen, it could come down to 110.50 to 115 area. Then in the case of USD CHF, they could gain a little bit to 1.0050 and then come down to 0.9850. Then Canadian dollar is expected to make a come down, and it will just come down to 1.31 from that 1.3350 high they could show during this week. And Australian dollar from that of 0.7600, they are expected to gain to 79 level. Already they are shown 0.7600, even though the initial low was 76.11, they are just holding it here to gain during this week. So you find that currencies will be range bound again during this week, but initially they will make the slide and then rise and again slide. That sort of moves that they are expected to do during this particular week. Now let us do the market reading in order to find out how exactly the players are expected to make the moves. In the case of euro, they set 1.0660, that is not been breached, whereas euro high has been breached 1.0681. So 1.0679 was the initial high. They just breached the high and holding high. So they are holding above that of the initial high. So they could make an extended upward move for 2 hours and then start making the slide. Then in the case of GBP, 1.2531 is the low, which is not been breached. The high is 1.2556, which is also not breached. So the low and the high are intact. Then in the case of yen, 111.13, 111.50 are the lows and the highs. They are not breached the low or the high. Then CHF, 1.0011 is the low. They just breached, came down to 1.0008 and holding there. High is 1.0028. So they are likely to come down a little bit and hold before making a rise. Then Canadian dollar, 1.3299 is the low, 1.3328 is the high. They are not breached the low or the high. In Australian dollar, They just breached the low 76.11 and came down to 76.00 and holding there, and they could make an extended downward move for 2 hours and then start gaining it from that of the late Japanese session. Then 76.41 is the high which has not been breached. So all along you come across that euro is in positive territory. GBP is in positive territory now nominally, but Australian dollar is in the negative territory. As far as the denominator currencies are concerned, USD and USD CHF are in negative territory, but USD CAD is in positive territory. So you find that the majors are showing the USD weakening move nominally, but the commodities are showing the USD gaining move. This is a contrarian move. They are doing it in the low volume condition in the market in order to induce the traders to commit positions in the crosses as well. And later on, they will try to increase the volatility. So only in the case of Euro and USD CHF, they just breached the high and the low, and not a very significant move is seen so far. So the recommended trade for today, 3rd of April, you can buy near that of the low in the case of Euro, 1.0660, and keep the hedge order 1.0630 and take profit at 1.0710 during that of the gain. Then in the case of JPB, 1.2530 near that of the low, you can keep a buy limit order, and exit could be 1.2590 during that of the European session, and sell stop could be at 1.2490. In the case of Australian dollar, we can take a buy straight and keep 30 pips below the hedge order, and then 76.70 we could be able to exit out of the position during the European session. So these things you can try it in a demo trading platform. So now at the moment they are doing the weak beginning false move in the case of Aussie, and you know the commodity pairs, they lead the rally and lag behind, so which has already shown the US dollar gaining move. Slowly you'll find Euro and GBP will also show the US dollar gaining move, and later on during the European session onward, during the European session they could start gaining more and more during the US session. Then these are all the session timings. So we have the daylight saving system is on in Europe as well as US. So the Japanese session gets over by 7 GMT. 7 to 7:30 GMT is the gap time before the start of the European session. 7:30 to 13 GMT is the European session. 13 to 13:30 GMT is the gap time before the start of the US session. 13:30 to 20:30 is the US session. 20:30 to 0030 GMT of the next day is the gap time before the start of the next day Japanese session. This is how you come across the market is 24 hours. We need to use the GMT time frame to refer the market so that wherever we are, we will be in a position to refer the market at the appropriate time. If we try to use our local time, I may say that it is during my morning hours, it is like this. And somebody in US might say that during my night hours, it is like this. Instead, if you use one single universal time, namely the Greenwich Meridian time or GMT, then all will be referring to the same time and the tick, so that there won't be any confusion when you talk in terms of GMT time frame. Then also you have to follow that once the spread becomes more than 40 pips between the high and the low, then we can commit positions in such currencies. Here in the case of Australian dollar, now it has become 41 pips. So that way you can commit positions. And wherever it is not more than 40 pips, you avoid taking position. When the low is formed, new low is formed and not cut for 30 minutes, then close the can take a buy position there. So if you've got any question, you can ask me. I'll be willing to answer those questions. Santish, there is a question. If the month beginning in mid of the week, is it considered to be the month beginning or the previous month end? For example, last month, March, first falls on Wednesday. Okay. Whenever you find that the current month gets over in a week, the same week, then next month starts. Say, for example, 30th and 31st of the month, following that 1, 2, 3 of the following month in the same week, will come across the trend reversal will prevail within those 5 days. And this time you come across the last week, the full week, and this full week, 3rd to 7th of April. These two are the last week and the first week. Then 10 trading days, the players are known to make the trend reversal moves. Because, see, during the month beginning, they set the extreme lows and the highs. So, in a market, you find the lowest level put option, highest level call option, they write it. So that the traders will find it extremely difficult to handle it. Anyway, with a premium, they will try to take positions closer to the other market. Then later on, what happens, by month end, if they have done the extreme put option, they just book profit in that. And extreme call option on the higher side, they book profit. So month beginning they write, month end they book profit. So they can achieve it only by dropping the market in a very big way, closer to low, and rising the market in a very big way, closer to high, so that they'll be able to book profit in those extreme positions. That is why you come across the monthly trend reversal happens. So when that happens within that 5 days, the volatility will be very high, because in short 5 days time frame, they have to set both. Whereas if they have the month gets over in a week and the new month starts in another week, they have 10 trading days to do that. So they do normally the consolidation and induce traders to commit positions, talk more about fundamentals, economic conditions, or speeches and government policies, etc., and then try to bring in the volatile moves. Hope you are able to understand this. Any other question, please? Let me show the forecast again. I'm just showing the forecast slide for you to follow and make a note of it. And this webinar is being recorded and it will be available in a fixed rate anytime soon after the webinar is completed. Then probably you can just listen to the webinar and just note down the forecast and see how exactly the market is moving in line with that of the expectations of the forecast. Then you will be able to find the value in this forecast. In the levels in which the currencies are expected to swing in this week is shown here. Any question you can ask me. Always keep in mind they continue to make the contrarian moves, regular US dollar weakening, regular US dollar strengthening moves. Alternatively, So you should be able to differentiate them and using the net changes and then understand how the players intend to make the moves by following the type of moves they are doing it in the market. For that, you need to know the initial lows and the highs, note down that on a daily basis, and make use of it for your reference. Your recommended trades are given here. Try it in a demo trading platform so that once you understand how exactly the forecast works, and later on if you commit in a real trading account also, you should use the hedge order to limit the risk and maximize the profit using a trailing stop in a profit making position. These are all the market timings. From now on, you'll find that there is 30 minutes gain in the European session, and 1 hour gain in the US session, and 30 minutes loss in the Japanese session. These are all the session timings till October. Okay, no question is coming. I'll come back on Friday and try to review the forecast, what I have given it now, and show you how exactly the forecast is dependable and also how the market has moved in line with that of the forecast expectations. And I will review and show you the levels in which the currencies are expected to swing and how in the market it is respected, so that you'll be able to understand market is predictable. Wish you all the best in your trades. See you on Friday. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. I will come back on Friday and see you all with the good results on the trades, and hope you will be able to really understand the forecast and get rid of the market fear. That will enhance your profitability. Wish you all the best in your trades.